Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here. Guys, have you been wondering why the housing market hasn't cratered yet? We're going to tell you exactly what's holding it up, and you are going to be shocked. It won't last for long. Bad things are going to happen as this unravels. Let's get into it.
Trade Genius.
All right, Bob, file this under things you didn't realize were happening. This one's pretty wild. I had no idea how egregious the whole, it's almost like we're at another great financial crisis, housing bubble 2.0 about ready to implode here.
So Phil, just when we think we can't get any more bearish, we find out, Doge might be working the federal government, but we found something else too. We didn't really find it. We're stealing it from other people, but amazing. We think Yellowstone is the next super volcano to explode. Did you guys know that you are paying the mortgage for 1 million homeowners, regardless of whether or not they have it as a rental property or as a home that owner occupied? You're paying for it. And this program goes, I think, for another year. I'll let Phil talk about that in a second. But what I want to get to first here, Phil, if I can throw you off for a minute, I just want to show you this chart, right, as to why this is not going to end well. Check this out, Phil. This is the debt to income on these mortgages.
Right.
I mean, it's absolutely insane. So, it's funny. Somebody was joking in a room when we brought this up that said, now you know why your children can't afford a home. So it's one of those bad news, good news situations. Is just like in DC where the selling is getting rampant. This is spread across the nation. And what you said too, Phil, and I'll throw it back to you, is that this might be a bit of an insider's game because most people don't know that you can take advantage of this.
Yeah. So the debt to income ratio is the reason why I think we're going to have our next correction, regardless whether or not this was program was an issue or not, which we're going to get into a little bit more here. But we're just at too high a level here, and obviously this thing stair steps higher and higher as we get through the decades. But we're at the extremes. So if you were to kind of draw a trend line on the bottom of this graph going up, obviously we have quite a bit to pull back on just to get things back to a historical mean in terms of just the trend. So we're way over our skis and all this stuff. Now, what's been pouring gas on this fire and why housing prices really have not corrected is because of this. So there's a program when it comes to the Federal Housing Administration loans, and this is all part of the HUD, Housing and Urban Development, COVID-19 loss mitigation program. So throw this in with the PPP loans and all that other stuff. So PPP loans, obviously that created inflation because nobody had to pay those back. But what people don't realize is this loss mitigation program. So all you got to do if you have an FHA home loan is just say, I can't pay it. Can't pay this month. Sorry. They'll cover it. So people have realized you can just do that month after month after month after month. So people have gone 3-4 years not paying anything on their mortgages, or maybe a payment here and there, whatever, but it's egregious. Some people have duplexes. So you guessed it, they're collecting rent, but claiming they can't pay their mortgage. And there's not much that they have to do other than say they can't make the payment. And the program, because it's a byproduct of the COVID-19 programs that we're trying to cover over people unable to, cover their monthly expenses, which this has gone on far too long, much like how the printing presses probably should have been turned off after the next new all-time high in 2020 was made. But this has gone on so long now, you've got literally tens, if not hundreds of thousands of mortgages that are being covered by this. So think about that. Instead of paying your mortgage, what are you going to do? Well, you're going to go out and spend, right? So this is why the retail numbers probably should be far worse than they are, because all these people are spending money in the economy rather than paying their mortgages, right? So this has been going on since April 2020. It's due to end in February of 2026, unless of course maybe Doggy and those guys start honing in on this. But this is a huge issue. And if you think the housing market, we haven't seen anything yet in terms of the downturn, because once this starts to happen, these guys are forced to get foreclosed on. You're gonna have a ton of inventory hitting the market again. So really, I think as much as the market needs to pull back in the housing market, this is probably going to accelerate things in 2026 once this program is totally done, unless they go in beforehand and this is the next thing on the doggy target and they deal with this sooner rather than later. But assume that's not the case. So this housing pullback can last a really long time.
Yeah, and I was looking up as you were getting the slide prepared, is that they said the number is 1 million homes mortgages being paid by FHA. That is absolutely insane, Phil. 1 million mortgages. Think about that. How many homes are there out there that have mortgages? So you're talking a couple percentage, and then somebody in our room said 14% of them are delinquent. So we have another cliff coming. It's just amazing to me. But unfortunately, this all needs to be washed out, and there's no way the stock market avoids disasters in the real estate market, because this is where the mother's milk comes from to pay for stock. So it's going to be really interesting to see how this plays out. I mean, look, the Biden administration left one landmine after another for Trump. And so this is one of these things that can be pretty nasty. Now, probably politically, they may just quietly let this thing run out, get through the next election cycle, and then hammer them, where because Trump will be gone. But I can't even imagine the fraud that's sitting in there. I was reading an article on it that said even people that have rental properties under this, they're not even owner occupied. First of all, they lied on their FHA application saying that they were going to be owner occupied, but flipped it right away to a rental. And then number two is they're still collecting the rent, but not providing any money back to the FHA. So I don't know all the rules, the whys and wherefores. Did they self-attest? Did they, were those rules really in place? But I can't imagine that this was just risk-free money. And so I would think there's a lot of fraud coming up. I mean, and we're going to end up, Phil, we have 1 million people in the federal government that's at risk. We have 1 million borrowers they could be both the same. Can you imagine that? You lost your job as a federal worker and you were claiming FHA hardship at the same time, and then they both end at the same year. It's going to be pretty brutal for people.
Yeah, I agree. So I think, my view now is that we'll probably get a recession and more of an L-shaped recovery, which I think the market will be surprised by, because typically the once the bear market hits their bottom, it's somewhat of a V reversal. We haven't seen an L-shaped recovery probably since the 70s. So it will surprise a lot of people, but I think there's a good probability, given all of the things that are in front of us that we have to deal with, and inflation being the number one thing. If inflation wasn't there, then I would probably say, yeah, you could get away with another V recovery, but I think they've kicked that can one too many times down the road at this point. So
yeah, I think we're done with the V's. Hey, real quick, Phil, administratively, do you think we want to try to do a podcast tomorrow for the Fed meeting?
Yes, let's do a live one for that.
Okay, let's do that, guys. And also, gold's up over 3,000. And just remember, this is macro bear stuff for us. We still see a 6 to 10 week relief rally coming in play here. We just have to get through the next maybe 3 or 4 days, or maybe even a week. And then I think it'll be a busted move. It'll make what we did last couple of days. That move should be multiplied by 3 or 4x over for the next 4 to 6 weeks. So that's where we're going to make our money. And then the summertime either going to be nasty or boring. So just don't be too bearish too short term. I think there's going to be plenty of room and time for the bear come August to the end of the year. So with that, Phil, thank you and have a great day, everybody.
Trade Genius.